Bismillah ar-Rahman ar-Rahim. Assalamu alaikum. Thank you, Richard, for the kind introduction. And I would like to start by thanking IIBI and ISRA for inviting me to share my thoughts on the product development and Sharia governance. I will touch upon the first bullet point of the discussion, which are the key aspects, the Sharia aspects that the financial institution should consider while developing Islamic financial products. When we talk about development of Islamic financial products, the procedure and the steps which are involved are no different for an Islamic financial institution or to a conventional financial institution. This particular aspect raises at least two interesting questions. One, can a conventional financial institution come into Islamic finance? And the second aspect is, how can we identify an institution as Islamic? From a Sharia perspective, Islamic finance is not limited or restricted to any religion. It is open to all. And Islamic finance focuses on transactions rather than counterparties, except for where you are talking about a transaction which includes acquisition of stocks of a company, then the company needs to be Sharia compliant. So in summary, we can say that the companies, institutions, or corporates, they do not have any religion. It is basically their governing law, governing rules. It is basically the business activities and also the Sharia screening, which have been developed by the scholars, which determine the Sharia compliance. Now, from the second aspect is, how do we identify Islamic financial institutions? Now, the Sharia scholars have given us various guidelines to identify Islamic financial institutions. The key guidelines, which all the scholars agree upon, firstly, that particular organization should be a separate legal entity which have been created solely for the purpose of doing Islamic business. Second, it should have a Sharia board, of which the Sharia scholars supervise, they govern all the product development process and product implementation process. And thirdly, as part of the annual report, there has to be a Sharia audit report included in the yearly accounts, which is approved by the Sharia board or the representative of the Sharia board, confirming that we have reviewed all the financial operations of the company and the company is Sharia compliant. So when we talk about the Sharia, the Islamic products development process, there are key aspects which are looked into by the scholars. The first aspect is the purpose and the economic sense. When you talk about the purpose is basically why you are entering the transaction into. What do you want to achieve? At this point in time, scholars want to be comfortable that your ultimate objective, what you want to do, is in compliance with Sharia. And the second aspect that they look at it while they're looking at the objective is the economic sense. That this particular transaction makes economic sense for all parties involved. Once they are comfortable with that, the second aspect and focus on is Sharia. So how can you structure this particular transaction that it achieves Sharia compliance? And the third and a very important aspect is the legal documents. That you develop legal documents in a way that capture not only the purpose, the economics, and the structure which the scholars approve, that if you do it that way, that will be fully Sharia compliant. So these are the three fundamental areas which are required for any institution to develop a financial product. Now, when we talk about conventional financial institutions and Islamic financial institutions, the Islamic financial institutions are very used to dealing with Islamic products. They are very used to dealing with the questions which are raised by Islamic investors, and they have got a basic understanding of the Islamic fundamentals, and also to basically they know how to explain those structures to the investors. When we look at a conventional financial institution which is coming into Islamic finance, especially for the first time, they have got quite a few obstacles. First of all is the appointment of the Sharia board. Who to appoint, who to contact, where is their target market, who are the people basically who are accepted in those jurisdictions and all. The second aspect is the Sharia advisor. Who should they appoint, who have got the relevant experience of going through dealing these particular product. And lastly, the legal advisors, that who are going to be the legal advisors who can help them document that particular transaction. However, there are certain aspects which are different to a conventional financial institution and an Islamic financial institution, which the conventional financial institutions are normally not very used to. First of all, it starts with the product documentation. Now, when you talk about the Islamic products, their legal documentation tend to be slightly or quite different from the conventional financial institutions. It has got certain additional disclosures. And the conventional financial institutions at times struggle to identify, locate those disclosures or explain it if they are trying to sell it to the conventional investors. Now, these disclosures can be, for example, when you talk about a fund, it will have Sharia screening criteria. It has basically operating criteria, operating notes, how the fund is expected to operate. When you talk about, for example, an investment product, sukuk and all, it starts with the use of proceeds and all. Then the additional aspect where the conventional banks also struggle is they at times forget the importance of fatwa. They at times forget that when they are sitting in front of the conventional Islamic financial institutions or Islamic investors to invest in their product, the first aspect which the Islamic investors want to discuss and conclude on is a Sharia compliance. So, if you take an example of a conventional bank and a conventional sales force, they are normally used to talking on economic terms, starting with the term sheet. We have received various telephone calls from various conventional financial institutions which we have helped before, we have worked before, where the first meeting with the Islamic investors have gone basically rather difficult. Because when you sit in front of the Islamic investor, the first question they ask is, have you get the fatwa? And the sales guy is thinking, yeah, I saw some email on this. Then the second question is normally, who has approved the fatwa? And the sales guy says, I have to come back to you on that. And the third question is, what is the structure of the product? Sales guy normally have got a high-level structure, but he is unable to explain that structure because the concept of murabaha, ijara, musharaka, mudaraba is a bit alien to them. So, in summary, these conventional financial institutions who are looking to come into Islamic finance, looking to develop Islamic financial products, they need not only to follow the principles which the Sharia scholars or the Sharia advisors normally provide them, they need to take care of a lot of additional aspects with regards to sales and marketing of their product. And the last thing which the conventional financial institutions also miss as part of coming into Islamic finance is the ongoing monitoring aspect. As part of Islamic products, a lot of investment banking products require ongoing Sharia monitoring. Whereas in the conventional banking products, we haven't seen any such practice. So conventional banks need to be fully familiar with the requirements of what are the additional features, what are the additional aspects they need to consider while they are coming to Islamic finance. So it is not only to the extent of product development, it is also to the extent of the sales and marketing, distribution, and also the ability to talk to potential investors. With this, basically, I just end my thoughts on that particular thing, and I'll be happy to take any questions you may have during the question and answer session. Thank you.